Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we're delving into the black art of investment. How do the professionals pick their stocks, and what do they look for once they've picked them? I've got Ben Rundle from NAOS and Justin Braitling from Watermark. Justin, let's start with you. How do you get a universe of stocks that you go after? Because there's 2,000 on the Australian market, and there's thousands more all around the world that you might look at.
And how do we narrow those down to interesting companies to investigate? Well, I suppose the key thematics that permeate through our investment ideas, in looking for ideas, are distress and change. I mean, they're probably the two features of most opportunities that we identify. Changes are often
Changes in business models or industries or
regulation, technology, just changing. Businesses operate in a dynamic environment. Wherever you have a major change, there will be a fundamental change in value. So how companies grasp those opportunities and respond to those changes is important. Investors are often slow also to fully comprehend the impact of these changes. So change is very important as a catalyst for a shift in value. And distress also is another important factor. Companies that are under distress, investors often will shy away from those businesses. And what we find is companies that are under distress tend to work very hard at trying to restore value or preserve value in the situation they find themselves in. So, they're the two features that we like to focus on.
Okay, I'll move to Ben. I normally get out the dart and throw it at the list of share names there and see what I come up with. But how about you? You delve more into the smaller end of the market.
Yep.
How do you narrow it down? Because there's a lot of stocks to look at.
Yeah, well, as Justin mentioned, there's thematics you look at. So an example is the falling Australian dollar. You go and start to look at who the beneficiaries of that theme will be. We do things like screens for value, looking for companies that are trading on low PE, low amounts of debt, and are kind of unloved by the market. We tend to take a contrarian view. We see ourselves as sort of value investors. Throughout the course of the year, we meet with hundreds of companies, and that gives you a fairly good flavour as to who's doing well, who's not, what industries to look at, and sort of where to focus your time.
All right, let's take you down the path a bit further. You've made the decision. You're investing in a company. What things get you over the line, and what are you looking for in terms of financial metrics or things that you don't want to see?
Yeah, okay. Well, so things probably we don't want to see. A key thing that I look at is operating profit and how it compares to, operating cash flow and how it compares to statutory profit. So with things like accrual accounting and revenue recognition policies, often there's a big differential between the two, and I think that's a pretty big red flag to keep an eye on, because at the end of the day, cash profits are really what you're going to have left over after spending has taken place in the rest of the business. Statutory profits can overstate the actual level of profitability in a lot of cases.
Okay, Justin, have you got a couple of key metrics that keep you in a stock or make you nervous about a stock?
Red flags. I think one of the most important aspects of any business or enterprise is the value that company offers its customers. The value in the service or product that they are selling is, I think, fundamental to the investment case. Here in Australia,
whether they're relevant and whether they're good at it.
Whether they're relevant, whether they're good at it, and whether there's value in the product or service that the company offers. There are lots of examples here in Australia of industries that are heavily consolidated and companies that are just overcharging their customers and not delivering value to their customers for the goods and services they're selling. So I'm very wary of companies that are overpricing and are over-earning on that basis. I like companies that are creating products for their customers that are compelling value for their customers.
All right, and a quick word or two, what makes you sell a stock? Is it normally value or?
Valuation is very important. If the investment case is not unfolding as we expect, we set very clear milestones for the companies we invest in. If those companies are falling short on that basis, management's not living up to its expectations, the strategy's not delivering, then we have to respond to that.
Ben, I'll ask you the same question. What makes you get out of a stock?
I think selling a stock is one of the hardest decisions to make, particularly if you've made money on it. Often you can leave a lot on the table. But yeah, I think Justin hit the nail on the head. If something changes with your initial thesis on the story, then there's no reason to be there. So that's probably your time. But often that can be too early, or it can often be too late as well. But
We'd all like to think there's a formula to buy and sell shares, but as you can see, there's a lot of layers to get through.